Okay, welcome to all our penny stock billionaires who, after today, are down to merely centimillionaires. A lot of exciting things happening in the market today. We are obviously the market is crashing. Overall, markets are crashing. A lot of our penny stocks are holding up. So the big question is that we're going to be focusing on is what's next for the overall markets, Nasdaq, Bitcoin, kind of the speculative sectors, and most importantly, how do you make money with this? Where are the opportunities where you can get that 10x to 100x upside? And the other question is there going to be another chance to have these 10 baggers again, or was that a one-time phenomenon, or is that something that only happened in 2020 to 21? Is that all over, or is there going to be even bigger and better things happening? So that's what we're going to be talking about tonight. So to start off with, let's take a look at what's happening with Nasdaq. This is the weekly chart right now. So, you can see what's going on. It's broken below the 50-week moving average. I always use kind of the 50. That's, usually pretty good across, most time frames, weekly, daily, even hourly. It's been, the Nasdaq, the market has been shaky for a little while now, and we talked about it on a live stream a few weeks ago where I said, it's very, it's kind of hard to see, the direction, because it could go either way. And that was right at this point right here, which was roughly 2 weeks ago, where it could, you had a bit of a base there, or, where it could, catapult to a new high, or it could kind of roll over. And now we're clearly seeing that it is rolling over. We're below the 50-week moving average now. It's kind of today, if you look at where this chart is right now, it's kind of a high conviction selling. I mean, this is it's definitely a trend that is broken. I mean, it looks like it's cutting through this moving average like a hot knife through butter, as the expression goes, and that is the deal. So let's take a look kind of where we've been in the past. As you see, the 50-week is, it's not as sensitive as, let's say, a 20-week. Let me see, I can even show you a 20-week. Maybe we'll see a little bit of a difference. 20, they'll give it a little more sensitivity. Of course, once you do 20, then you have more possibilities for fake out, which, as you can see, you have that. But you don't want to be, you want to be going with the trend generally. So you want to be long when it's above the moving average, and you want to be selling, or if you want to short, you want to be shorting when the index or anything breaks below that moving average. And this 50 moving average is good for, I use the same thing for Bitcoin, for everything pretty much. Okay, so as you can see, anytime it breaks below it, it tends to really drop further. I mean, by the time you see it break below the 50, it's already dropped quite a bit. So we saw this happen last, this was last February, March. You see the break. Once it actually broke, it was another nice drop. You saw the same thing in 2018. You can go back. 2016 wasn't as bad. You had a couple of fake outs over here, so there weren't big drops. Again, you had a bit of a fake out over here. 2012 here, big fake out. And the big one though was right here. As what do they call it? The GFC, the Great Financial Crisis. So the big crash. It really it broke below the moving average December 2007. So right the last week of December 2007, broke below. Kind of tried to in May it tried to break it above the moving average, didn't quite make it, and you had this kind of waterfall thing happening, and then it broke below. Okay, and here we are right now. So and of course, Oh, look at this. We got time travel here. Time travel. Okay. Okay, now I screwed up the chart. I don't know how to get. Okay, here we go. Okay. Um, things look like they're going to get pretty ugly. I don't want to. I don't want to. Sugarcoat this. Things look like they're going to get pretty ugly. Let's go to the daily chart. By the way, there's good news. There is good news. There is light at the end of the tunnel. I'm going to get to the good news in just a second. As you can see in the Nasdaq, it broke below. You had a bunch of these fake outs on the 50-day moving average. You had a couple of fake outs in this kind of time frame between December and January, where it looked like it could have broken out to a new high, or it could I've talked about it before. Like, it could go kind of either way, and now there's a clear direction, and the direction is down. Okay, the trend right now, it is down. You could say you might have like a bit of a head and shoulders top here. It really doesn't look good. It's like a rounding head and shoulders thing happening. You have this kind of almost like a waterfall starting to happen, where it's going to start dropping. I think it could drop pretty hard, so we could see a nice drop. So the question is, where are we going to see a base? Unfortunately, I had all these great trend lines. I don't have, for some reason, the trend lines disappeared, but yeah, I don't have it. But anyway, we're definitely below the. It's broken pretty much all the trend lines here, so it could. The Nasdaq could probably drop. I would say it's very safe to say 12,000 on Nasdaq. So, what is that? That's another 20%. I mean, that's not a big move to go from 17,000, 16,000, 12,000. Yeah, I don't think that's a big drop, but yeah, I think we could see some support here in the 12,000 level. Beyond that, maybe 10.5 and 10,000. So, but between 10,000 and 12,000, you got some support. The good news here is the good news. The good news. The good news is that a lot of our penny stocks have already been hit. The penny stocks, a lot of times they're the first to go up and the first to go down. So, the penny stocks were the first to go up, in, March of 2020, actually April, May, things really started cooking. And then they were the first to drop starting in last February, Valentine's Day. We saw the tops in the penny stocks, and also some. Yeah, I shouldn't just say penny stocks. It's really the emerging growth, the high growth type stocks. By the way, if you are just joining, make sure you join our Telegram channel. It's free, and we got a lot of great stuff there throughout the day. The link is in the video description below. And of course, if you haven't joined the channel, click the subscribe button, and you can become a member. I don't know, member, whatever it is, but you'll get notifications or whatever, and get our email. But the links are in the video description below. Let me just see some of what is. Yes, Michael, we haven't seen you in a while. Glad to see you're back. Yeah, the penny stocks have been down for quite a while. And let me just get this. What's going on here? Okay. Yeah, penny stocks have been down for quite a while. So the good news is a lot of our stocks have already been hit. They've already been building bases for the last 6 months. I'm going to go into some of those now. I'll pull up one just as an example. I'll kind of give you an example of, actually, this has been a strong one here, and that's ESE Entertainment. Okay, so this thing went from 37 cents when we introduced it last year, 12 months ago. It went to 450, so it was like a 15 bagger in 4 months. That's outrageous. Usually these things take 10 months. By the way, going forward, I think our 10 baggers are probably going to take 10 months. We're not going to, I don't think we're going to see any 10 baggers happen in a 4-month window. It's going to take about 10 months for these things to fully develop. But hey, take a look at what's going on here. So ESE, it's been building really kind of a basic consolidation for the last, starting, I would say, May. I think really, yeah. So April, May, you kind of started to see the beginnings are really over here. Now, here's what's going on here. What I don't like, I'm just noticing today's we're below the moving average, we're below the 50s. So, it's kind of in a sell mode right now. So it's probably, we could see the thing drop a little bit. It could be a fake out. We're going to see in a couple of days here what this means. Yeah, because there's definitely been quite a few fake outs in the last, 4 months. There hasn't been a clear trend. I think we're going to build a base here. We're going to kind of somewhere in this dollar to $1.50 range. It's going to happen. And once that happens, this thing is, it's going to be in my opinion, $10 plus stock, 12, even $14. That's an example. Let me give you another example of another stock. No, not ESC. Former Next Super stock, which I'm actually at this point I'm a bag holder. I'm holding shares here, and this is Fans Unite. Fans Unite. We introduced it at 17 cents. It peaked at was it 230 or so, and it looked like it was building a base really again from that May period right into November. It kind of broke down a little bit, but yeah, if you notice, it's not like it's waterfall and crashing. It's kind of just crawling along. It's looking for a firmer support and a catalyst to move up. To give you contrast, let me pull up another stock in that sector, which is DraftKings. And you can see it's a completely different chart. Now, DraftKings, let's say, is a leader in the space, sports betting space. And that one took off in, what is it? Yeah, March of 20. Oh, so it took off really in March, right when the lockdown thing, the COVID thing started to happen, and it accelerated in August of last year. We had the big peak, but this thing has been in a heavy, heavy downtrend. I mean, this thing is down from 70 to 20, and again, this is a leader in the space, and this is kind of keeping a lot of these gaming sports betting stocks down. Where is it going to drop? I think we're going to probably end up finding a bottom somewhere between 16 and maybe even $12. So it's not that bad. I mean, it's not okay. So even if it drops 50%, I mean, it's not like it's dropping 90%. I mean, it's going to come back. I believe at DraftKings, again, this is not advice. I should have mentioned that. Yeah, we had the disclaimer right below. We're not giving advice here. This is not official company information we're talking about. It's purely opinion. This show is purely discussion of charts, maybe a little bit of fundamentals. I'm trying to stay away from fundamentals and only focus on the charts on this show. But yeah, none of this is not official company information we're talking about. It's purely my personal opinion. Hey, I could be wrong 112% of the time. Can Fans and OG be a 5-bagger by April? So that's only 3 months from now. I'll answer that question in just a bit. I will answer. Yes. Let me go to. I'm going to get to the questions in just a bit, but I just want to kind of cover. I want to finish off on this thought over here. So, yes, I'm just showing you what's going on in the sector. Penn, another leader in the space, and that is, look, had big move, and it looks like it's still going down. If you look at these charts, they are still very, very steep downtrends. Not at all like what do you call it? Fans Unite. Can I pull up and do a comparison? Can I do one? Interesting. I'll do a red chart. Okay. It's kind of okay. So interesting. Okay, so this is side by side, basically. Penn National, Fans Unite. Um, I think what you see happening though is um, Fans is more or less been kind of stabilizing here. The downturn here on Fans has more or less stabilized. It's not a steep decline. It's no longer that steep decline. On this chart, though, it's not as apparent. It's not kind of as apparent. Whereas Penn, DraftKings, here's another actually former client, Fubo. Fubo. How do I clear? I want to clear this up. Okay, so Fubo. Actually, Fubo, it's a stock that debuted February 2020 at $10, ended up going to $60 onto the New York Stock Exchange. So yes, we have had some New York Stock Exchange companies on our program, and look, we're back down to $12 here. So it's done a round trip. Although I think, I'll tell you what, if you look at this chart, I think this thing is pretty close to a bottom. So Fubo could be bottoming out at $10. Um, and I think stocks like Fans are going to bottom out. ESC is not a sports betting company, but although they do have now they do have some exposure to the sector with the new acquisition. So I think that that's there's going to be some good things happening. The bottom line is this: is that if you look at it, look at the big picture. Is sports betting, is it all of a sudden going to stop? Not at all. Sports betting, legalized sports betting, is just getting started. I mean, the legalization is really just starting to gain steam. I think there's a bunch of new markets that just went legal, and this is going to be a massive, massive trend. But of course, this is what happens with everything. Like stocks, get way ahead of themselves. Buy the rumor, sell the news. I've said that so many times on this show. Is that the stock is not the business, the stock is not the sector, and the sector is not they're not related, right? So and again, we have some companies that are doing tremendous things, like ESC Entertainment as an example. These guys, their revenues are up 5,000%, 50x the run rate since last year, and the stock has been taking a hit. So it got way ahead of itself in the beginning. It went up 15 times, 17x, and now it's way down, way behind, and so now it needs to catch up to the fundamentals. But yeah, sports betting, I can guarantee you. I mean, actually, this is the one thing I can guarantee. I'm willing to make this as a guarantee. Is that sports betting business is going to be bigger in 12 months, even 6 months from now, than it is today. So these guys are going to be all generating much more revenues 6 months, 12 months from now. Again, I'm not giving advice on any particular stocks, but this is obvious. It's apparent. It's like saying, hey, is cloud computing going to be bigger? Is a the future, the things are e-vehicles, electric vehicles, going to be bigger in 6 months than they are today? Absolutely. In a year from now, absolutely. Is AI? I mean, plant-based foods. Okay, plant-based foods is something that's just getting mainstream right now. The vegan thing is just getting mainstream now. Is it going to be a trend that's going to be here, 10 years from now? I have no idea, but I can tell you this much: it's going to be bigger in 3 years than it is today. These things are actually the underlying businesses are doing great. The companies we have kind of in our universe of, next super stocks, most of them are, they're doing better than ever. They're generating revenues. They're cashed up. They're sitting on a bunch of cash. Example, ESE, Fans Unite. Former Redline Howell still has 30 million. There's a bunch of these guys that are doing really, really well. And now what we're going to see is the stock prices will be catching up to the fundamentals. So again, the penny stocks have really been beaten down much more than the market. So what you're going to see is over the next probably, couple of weeks, you're going to see the Nasdaq, you're going to see Dow Jones, the big markets, all heading lower, and but the penny stocks, I mean, we might see a little bit of sideways movement, maybe a little bit. There's not much more to go. I mean, they're not going to go to zero. They might drop, I don't know, a couple, maybe another 5-10%. It's not going to. It is not. I don't think we're going to be going any lower. And here's the thing. Here's the thing you guys got to remember. Here is the main takeaway. The big idea is this: the big money is made at the time you buy, really. And when you buy things which are de-risked, when nobody wants them, you want to be positioned right now for where the market is going to be in 3 to 6 months. We don't want to be chasing stocks. I hate chasing stocks. And every time you chase these momentum stocks, you get burned. I mean, like we've had a couple of bad experiences last year with a certain crypto stock. I don't want to mention the name, but we announced it, and the thing was already like, the momentum out, and it could only drop, and it did drop. So the momentum trade did not work. Right now, we're doing the bottom feeder trade. Okay, the focus is bottom feeder stocks, things where they're at the bottom, they're not going to get worse. Or you have this asymmetrical setup. That's the thing we're looking for. Asymmetric setups where the downside is limited to maybe 5 cents, and you can make $5-10 on the upside. Let me give you an example. ESC. I have it up on the screen. So ESC. Can the stock drop to $1? You know what? It could easily drop to $1. I don't think it's going to go below $1 because right now, all of a sudden, the valuation is caught up. I mean, if these guys are doing $50-60 million run rate, I mean, you're going to see the numbers come out soon. Their market cap right now is 50-60, 1 times revenue. Now, typically these things were going for 10 times revenues or more in the esports space. Sure, the multiples might be coming down temporarily. They might be going to 7. So, but you're buying this thing at 1x revenues. When the multiple expands, and of course these guys are doing more acquisitions. I think that the upside in this stock is probably minimum of $5 here. If it goes back to the old highs, $5, and really $10-12. So let's say this thing goes to $5. You're risking 20 cents. So realistically, I don't see this thing going below $1. So you're risking 20 cents, 25 cents, excuse me. You're risking 25 cents to make, if it goes to $5, you're to make $3.75. That's a 15-1. That's a good risk reward setup. I mean, that makes a lot of sense. Let me give you another one here. Organic Garage, one of our favorites here. Where is this going to go? It's not going to go to a penny. It's not going to go to a nickel. We've built a foundation. We've built a base here, a foundation. Look at this. It's not even, I really thought, we might touch, 30 cents or even 28 cents. It does look like it's going. And today, look at this, at a very strong close. I mean, very strong buying action on a down day for the markets. I mean, you see something is happening here, right? Now, we're below the moving average. Look, I'm not going to lie. We're below that 50-day moving average. But it's going to catch up. So it's going to build a base over here. But look, what's the downside here? Let's say this thing goes to 30 cents, right? So you're risking 3 cents. And I've already talked multiple times why this thing could be going to $2.50 or even $5. Let's say it only goes to $1. Let's say it only goes to $1. Let's say it only goes back to the old high, and it's not. It's probably going to go at least double that. So let's say $1.50, $2.50 on the really downside. So you're basically making $1.20 to $2. Your upside is $1.20 to $2, and your risk is 3 cents. That's what is it? 100 to 1. I think it's a pretty good risk reward setup. A very good risk reward setup. Um, what do we get? We got some spammers. I gotta get rid of these. Let me clean up the spam here. Um, yeah. So that's the thing. We're looking for these asymmetric risk reward setups, and now is the time. It's very similar to what we saw March of 2020. March of 2020, the markets fell apart. Everything looked like crap. I mean, we were really staring into the abyss, and the money was made buying these stocks in that March April timeframe. Does anybody remember Imagine AR or Next Tech? Those are two of our clients. Imagine AR, I think, got as low as 2 cents. Let's take a look at Intar. So Intar at that time, right? So Intar back in blast from the past. So here's what happened. And actually, their business, I mean, it was a little different. They didn't get into all the other stuff, but yeah, their business was going really good. It was a really good uptrend. They had cash, and they had the Corona thing hit. It dropped from $3 Canadian to 85 cents. 70%. What is it? 70% drop, 65% drop. It bottomed out in April. And you could have gotten it at 80 cents, but this is where you could have really gotten in here. You had kind of this double bottom, head and shoulders bottom happening over here, and the buy signal was right here, April 9th. That was the real buy signal, $1.56, and it went to $10. So yeah, and that was a stock that we introduced originally. When did we introduce? I think it was in August 2019, 50 cents. Wait, was it? Oh, yeah, it was August. I think it was, September, or yeah, it was 60 cents Canadian. Yeah, I thought it was, yeah. So that actually, you know what? I was looking at the, so yeah, so that would have been almost a 20 bagger. Next tech would have been was basically a 20 bagger. And I think actually, I think at some point this thing is going to bottom out. I don't think we're there yet, but yeah. Let's take a look at IP. That's another former client, and let me show you how horrific this thing was. From February, it went from 9 cents to 2 cents, and it bottomed out over here, and it went back from what is it? 2 cents, whatever it was, to 40 cents when we were involved. So it was basically a 20 bagger in that time period. So bottom line is, you want to get into these things when they are cheap, when nobody is interested. So let's focus right now on where we could see some opportunities. By the way, let me just pull up Tesla just for entertainment purposes. It's pretty interesting. Pretty interesting. The Tesla, it's not really looking weak. I mean, it's kind of below the moving average, but it's not. This doesn't look like a chart that really wants to drop. I mean, it really doesn't look like it wants to go down, as crazy as it sounds. Again, I'm not a Tesla, a fan or whatever, but this thing really, it kind of doesn't have that. It doesn't give off that vibe. It's not like waterfall. Yeah, I mean, it looks like it's forming these consolidations where it could break out. Again, I know this technically looks like it could be a head and shoulders, but yeah, I don't know. It's very strong. By the way, let's take a look at Kathy Woods. How's Kathy Woods doing? ARKK. Okay. Yeah, so the Kathy Woods ETF looks like it still has a way to go. It might go. I mean, it almost looks like a little Nasdaq chart. It could go to 58. So we got about another 20%. I think these things could go another 20%. Some of those big names. Um, yeah, I mean, this thing is kind of accelerating. If you look at this chart, I mean, it looks like it's just accelerating the downtrend. The downtrend is just snowballing. The acceleration is snowballing. So the ARC thing looks really bad. This is the innovation index. It could drop. It could probably bottom out 58, 50 range somewhere here, 40. It could drop pretty hard. Uh, Compare that to, okay, by the way, a new client, new debut stock. We're going to be introducing Pharma Drug next Tuesday. Again, highly speculative stock, drug development space. They're doing very interesting things with psychedelics, some other compounds. And, I think this thing could be, easily a 50-cent stock. So it's got room to go to be a 10 bagger, maybe even a 20x. And by the way, look at this chart. We're not, if you look at this chart, even over here, even at, 6 cents, I think, look, I think people front ran this thing. We've been talking to them for a little while. Somebody must have front run this from, 4 cents. But, even here at 6 cents, it's 6 cents. Oh my God, 6 cents. It's looking like it's just getting started. I mean, we're not buying it at that peak. We're buying it right at the bottom. It broke out of the moving average. So if you're a moving average guy, which you kind of want to be, it's broken out above the moving average. So this has been, I think, de-risked. Where is it going to go? I mean, where is it going to go? Back to 3 cents? It's not going to go lower than 3 cents, I don't think. It really hasn't been too much below that. So you're risking basically 3 cents to make, I think you can go to 50 cents. That's 47 cents. So it's a 15 to 1, 15 to 1. That's a good setup. Okay. So this is a great looking chart. Let me give you another one. So by the way, we have 3 new clients. I apologize. I don't like to introduce 2, 3 companies in 1 week. It had to happen. I don't like it, but this is it. Usually, I like to have at least a 2-week buffer between new companies. But here's the thing: there's a lot of really interesting opportunities in the markets right now, and I want to be positioned. For the next 3 to 4 months out. I want to get into these stocks really cheap right here because I think they're going to be breaking out probably by March. It's like, listen, it's like the Wayne Gretzky. I think on Twitter we have that Wayne Gretzky quote, which is, you don't chase after the puck. You don't go where the puck has been. You want to be positioned where the puck is going. So you want to be positioned here. When the puck comes to you, you hit the puck out. So you want to be positioned here, getting these stocks right now on the ground floor. When they become 10 baggers, then you're in a position to sell those off. You want to be selling them to the FOMO buyers, the momentum buyers. So we want to get in cheap, de-risked, sell when it moves up. Somebody was saying, oh, pharma drug, by the way, 300 million shares. Yeah, I think they got I don't know, 300, 400. It doesn't matter. Guess how many shares CBDT had? By the way, let me just show you something interesting. I'm going to show you something interesting. Okay, so this is pharma drug, right? Let me show you CBDT, which, by the way, CBDT, exactly the same, had 300 million, 400 million shares out, whatever the number was, when we began it at 5 cents a year ago. Actually, 13 months or 14 months ago. It was a nickel. It went to 250. I'll be honest with you, I did not expect it to go to 250 from a nickel. I thought it would go to 50 cents. possibly 75 cents. But when it got to 50 cents already, that 50-cent range, you could kind of tell it was this thing. The market was a different market, and it could go to $1. It went to $1. I thought, okay, $1.50, the 250. I never expected. I thought maybe $1.50 would have been the peak. So yeah, it went to 250, and very interesting. These things look so similar. So basically, I know those people who still like CBDT. I think the CBDT story is kind of done. It's going to be quite a while before this thing is ready to make another move. But you know what? I mean, these charts, they kind of rhyme, right? Look at this. Um, Pharma drug, I think, is going to be our CBDT. And by the way, when we took on CBDT, they didn't have such great fundamentals. It's kind of a development stage. They had this, they had a little bit of this, they had a little bit of that. It was like, it was exactly very similar to pharma drug, believe me. There's a lot of bag holders from higher prices. So yeah, I really do believe that pharma drug, PHRX, and what is it, LLMLF, over the counter, is going to be a 50-cent, $1 stock. Of course, not advice. It could go to zero. These are very high risk stocks. Okay, let's go to a couple of new ones here. FE, First Energy, lithium space. Look, if you're a believer in electric vehicles, electric cars, not only just in cars, but look, the electric motor is going to be everywhere. It's going to be on boats, planes at some point, everywhere. I mean, in device, we're seeing it's already in devices. We need lithium. We need lithium for these batteries. Okay, and there's a shortage of lithium. You don't have electric vehicles without these energy metals, without the battery metals like lithium. And these guys are, they got a great project in Quebec. So it's in Canada. This is not like, somewhere in Africa where, you got the property one day, the next day, some guys with AK-47s come that you didn't pay off, or somebody else paid them off, or the Chinese come. And by the way, the Chinese are taking over Africa. So, there's no rule of law. You want to be in a place like Canada, okay? If you want battery metals, energy metals, any metals, stick to Canada. It's easy. So yeah, so this thing is looking real good. And this chart, it's above the moving average. We're pivoting off this moving average. It's bounced off that moving average pretty hard a couple times already. So this thing is actually looking good. I think we could see moves to, 60 cents plus. I think this could be an easy double, and then we could see where it goes from there. Let me see this long-term chart. Let me see a long-term, if we have yeah. Oh, I like this. I know this is something completely different. This was something previous, whatever, but, and by the way, CBDT had a similar chart. It was a previous company. I always say that stocks can always go back to the old highs. So if you believe that, then, this thing could be you're looking at these numbers. I don't want to say these numbers on camera here because they're so outrageous. They're so outrageous that, but yeah, you're talking about $30 plus. Can this be 100 bagger? I don't know about 100 bagger, but look, the CEO on the live stream, he laid out a case, not with the geologist, even better. Forget about the CEO. We got the geologist. And he laid out a case explaining to you why this could be a 20 bagger plus. So yeah, so Visby, all these other stocks, yeah, a lot of them started off really cheap, and they had some, what do they call it? They had some hair on them. They weren't. It wasn't a perfect setup. I mean, they looked a little bit rough around the edges, and then the diamond got polished with time. Every single one of our big winners, Peak FinTech, okay, Peak FinTech. When that started off at 30 cents, 18 months ago, was it 16 months ago? Yeah, we had a lot of doubters, and it stayed at 30 cents for a while. Let me show you that chart. It took a while before that thing got going. So it was, where were we? Yeah, so it was 30 cents over here. Post split, technically it's 70 cents with a split. So for a while, for about a month, it did nothing. All of a sudden, it started moving, and you had a consolidation here. Let's call it the $6 range, which was the old $3 number. And if anybody remembers the live streams, I was saying for months, it's going to break out of $3. It's going to break out of $3. And it took a little bit longer. It finally happened, but it did drop. It dropped, it dropped, 30-40% from there, from that $3 range. And then boom, we went to 14 bucks. And then, this thing is, I think that move is over. Again, the stock is not the business is not the stock. I think their business is probably doing better than ever. It's probably going to be even better a year from now. But the stock, it got ahead of itself. Now it's going to consolidate. Who knows? I'm sure it'll find a bottom at some point. But we want to be on to the next thing. We want to buy the rumor, sell the news. Okay, buy the rumor, sell the news. What does that mean? You got to buy these things when they're ugly, when they're raw diamonds. It looks, it looks like a piece of coal. The diamond, when it comes out of the ground, it's like black. It's like gray. It's it's got dirt on it, caked with mud. You clean it up, you polish it. All of a sudden, you have a Cullinan, the Cullinan diamond, like the Rolls Royce Cullinan, right? That's you, my friend, are never late. It is never too late. So here we go. Let's go back to, so speaking of fintech, here's another one. And by the way, this chart looks fucking amazing. This chart, this is a flag formation. I'm going to draw this for you, by the way. I'm going to draw this. This is XTM. They got a great symbol in Canada, paid. In the US, it is XTMIF. But let's just draw you a little trend line. It's like this, basically. Wow. So boom, you got a pennant forming. You got this pennant consolidating. And boom, this thing just breaks out of there. Just clear breaks out of there. Breaks above the moving average. So we're above the pennant. We're above the moving average. This is the weekly chart. So this is the big trend. And the same thing you see on the daily chart. Now, I got that trend line up top, right? As you can see, that was resistance, and then it was also support. But, this thing is clearly broken out. So this is a very different looking chart than those kind of flat charts. This is really a breakout here. And this company's got a lot of fundamentals. Look. Anytime we bring you a next super stock, let's remember, what is the premise of a next super stock? 3 things in common. 1, massive multi-billion-dollar opportunity, check over here. 2, multiple catalysts in place, news flow, M&A, et cetera, new contracts, they got that. And what else? Multiple catalysts and inflection point. We're at the inflection point right here. So yeah, so that's it. We want to get into these things right when they're about to pop. And this company has been around for a long time, by the way, a long time. So it's only now that you basically, anybody who comes into it now, I mean, you want to come into these things when they're starting to move. You don't want to be in there during the development phase, which could be, taking forever. Let me just catch up on a couple of things over here. So that is one of our new ones. And again, we're going to see these stories roll out over the next few weeks. If this was last year, this stock would have already doubled as soon as we introduced it. PHRX would have doubled right out of the gate. For sure, it would have doubled. First Energy, same thing over there. This time it's going to take a while for these things to get moving, but I'm looking for where I expect kind of the markets, the sectors, the trends to be in March. I think a lot of the markets are going to bottom out in March. These things are probably going to start moving earlier, but all of a sudden the FOMO is going to happen, and I think it's sometime between March of this year and May, you're going to start seeing moves, and the summer is going to be scorching hot, massive moves into October, November. That's my kind of prognosis for the year. We're going to have, big drop in Nasdaq stock markets into the first quarter, and at the end of the first quarter, things are going to start turning around. And at the back half of the year is when we're going to have massive gains. So you want to be planting the seeds now to be reaping the crops, in October, November. 10 baggers. So I showed you paid. Let me show you another one. Okay, so let's go. I'm going to run through our stocks. I haven't done a chart chat in quite a while, so let me go through a couple of these one by one. Liquid Avatar. Let me clear this. Okay. Liquid Avatar, the metaverse stock. So it started breaking out with the pennant forming here. This thing really was primed for a massive move. We're below the moving average, but it's kind of hanging out okay. I think we've found the base. So your base is really this kind of this is kind of where your support is right now. We're going to bounce off that, probably build a double bottom and pivot out of there. I think this thing is going to go to $1. But in order for this to go to $1, here's what needs to happen. We need to have some momentum happening in the metaverse space with NFTs, digital identity, all that stuff. And that's going to happen, I think, in March. It's going to take a little while because it's going to take a little while for that to happen because we need Microsoft, we need all those guys to start moving. And we need the big themes to start moving. So that's going to take a while. Right now, those things are a little shaky, but you will see those things are going to heat up, in my opinion. So Liquid Avatar is okay. I think we're going to build some support here. We are below the moving average, but I think this is it. Let's take a look at the. There's your 1 hour chart. I think this could bounce. I think this thing could bounce here. Let's go to Relic. Okay, so Relic, if you look at this thing, it's really been a very nice kind of uptrend, higher highs for the most part for quite a really nice kind of up channel. You could almost draw a trend line. In fact, I'm going to do just that right now. Green. You have a channel here, basically. And let me do another one. Okay. You got a channel happening here. And it's kind of going in there, then it's going to break out. So and I think we have a lot of support. Excuse me. We have a lot of support right where we are right now. It is below the moving average, although we had a lot of fake out. So it's really, you can see what happened when it broke out. It broke out of the moving average last December at 25 cents, and then again here at 50 cents in July. Look what happened when it broke down last year. It broke down from 65, dropped to 40. So yeah, wow. This chart, this Relic, wow, you got some crazy moves here. Crazy moves. Um, I think we're gonna bounce off this support in the next week, and it's just this thing wants to go higher. That's what this thing just wants to do. It wants to go much, much higher. Yeah. Yeah, no, but this, yeah, we've been consolidating, but this thing, it's going to break out at some point. I think this is going to be 250 by, I thought would be there by now, by December, January. I think it's going to take another 4 months. Basically, everything now is going to get delayed because a lot of these charts are kind of wrecked. This one is not wrecked. It's just, it's got a bit of a wet blanket on it. But yeah, it's going to come back. Let's see here. So Relic is looking good. Organic Garage, I kind of touched on that one, right? I said Organic Garage. Let me clear out this over here. Organic Garage, again, we got like this double bottom here. And probably the next week or two, we're going to see kind of this moving average come down to like the 38-cent range. And it'll probably be right around here by early February, first week of February, maybe. And then we could start building towards a new high. And that is going to be the big move. That's when you're going to see the big move. So what we saw back last month when it went from 30 cents to 70 after we introduced it was a quick double. That was like an appetizer. That was just an introduction. The big move is going to happen, I believe, starting in February. Let's take a look at what a potential catalyst, what can make this thing move. Let's look at some of the fundamentals. If they announce new stores, and again, Matt said he's going to open up, 4 to 6 at a time. He's going to make an announcement to do, and they can do it. They get the fire. They can do it. Don't doubt that they can't. So that would be a game changer. The market is going to basically extrapolate 30 million in revenues to 60 million in revenues. So, I mean, that right there is good enough for a double. They got the plant food, as I call it, the future cheese stuff, moving along. They got new SKUs coming out. They got new distribution. They got all that stuff. Now, I think, though, what is going to be the driver for this in the short term is going to be the store opening. That's my personal opinion. I know some people think it's going to be the future cheese stuff, but I think once they announce 4 stores or whatever it is, you're going to see some crazy moves in the stock. And then I think that's what's been holding this thing back is, people are saying, oh, they only have 4 stores or whatever, but yeah, it's going to be then it's going to start trading at 2x revenue, so it can go. I mean, right now it's trading at 1x of 30 million revenues. If they go to 4 or 6 stores, the market is not going to value them at 1 times future. It's not going to be 60 million. I think it could be 2x future revenues, because the market is going to assume that Organic Garage, once they do 4 new stores, then they're going to have another 4 stores, because that's the whole idea, right? So the market is going to extrapolate 12 total stores as opposed to 4 from now. So the multiple is going to expand, 100 million valuation. So you got $1 plus right there. Yeah, we're going to be doing another live stream next week. I'm not sure what day yet, but we will be doing an update. So that's Organic Garage. I know I've been talking about it a lot. I know people are tired of whatever it is, but you know what? Look, what I really like about the stock is I think it's the most kind of de-risk. It's like free money basically, and you got limited downside. The upside is $2.50 to $5. The downside is a couple of pennies. What is it going to go to 30 cents? It's nothing. It's a great risk reward setup. Let's go to Visby. We got a lot of Visby fans here. Now, what is going on over here? Let me just draw you a little trend line. Hopefully this shows you a little support. You know, Visby, I don't know if any of you guys know this, but it's a tech stock. Disruptive innovation, AI, and you know, those things have been getting hit. And I think now Visby is not completely correlated there. So I'm actually shocked that we dropped below the support of here. I really expected it to stop right around here at, you know, roughly 98 cents. We broke below that level, not unusual. So you got another level of support really right here. Just kind of this. Basically, it's this. It's not this, it's a little bit higher. It's a little bit higher than there. So it's kind of right around this level here. We're kind of at or near support on Visby. You know, again, look, we're below the moving average. You know what that means. But this thing, I think we're going to turn around here at some point in the next couple of weeks. It's gonna turn around. Let me look at the 1 week chart. Yeah, this is yeah, there you go. It's below the moving average there on the weekly. You get a breakout from 45 cents to $2. So it's $1.60. If you have a 50% correction, that's 80 cents. That would take us to $1.20. $1.20 is 50%. And if you go to 60, 70, so we're in kind of that, I think we're kind of near that last Fibonacci retracement. I think this is, you know, we're going to see this thing starting to bounce right here. I don't see this thing going straight down. I think we're going to build a base, and we're going to move higher. Now, this thing has got massive catalysts. Speaking of multiple catalysts, massive opportunity. I mean, you really have, you know, massive multiple shots on goal, right? I mean, multiple shots on goal with, they got the verticals, they got the security side, they got the retail, you know, stores, media stuff. You got so much stuff there. You got that Austin GIS partnership, smart cities. And again, these guys are just supplying the IP, so big margins. I think we're going to see. I think we're going to see a big move when this thing starts moving back again. I think it's going to be a $4 or $5 stock before it's done. Maybe even higher. It just needs to kind of, and I think it's going to find its footing sometime in the next week. I think sometime in the next week we're going to find the footing here. So that's Visby. Let's see. I think I covered everything. Somebody was asking about some old previous clients. Actually, we might be getting back. AIML might be coming back. So, this chart is, I mean, this chart looks terrible. What can I tell you? I mean, what's the market cap though? I mean, this thing is like almost free. I think at some point here, we're actually pretty close. We're going to see a massive buying opportunity here, and I actually think this could be the next 10x. Somebody gets into this thing at like at these levels, we could see a 10x upside from here. There could be some interesting there. Okay, so Lisa from RHT, I want to get her back next week. I'm going to be sending her an email, actually. We got to get Lisa back on. I actually want to get all the companies on next week to Okay, Bill Gates. No, Bill Gates. I think they put up some money for one of their projects. So I think technically their charity, the Bill Gates, one of the charities, is an end customer for AIML in where is it? Southeast Asia somewhere. But I don't know what that means. It, yeah. I mean, it's a pretty good validation, to be honest with you. It's a pretty good, strong validation. So okay, let me see if I can catch up to some comments. Let me see if I have any unanswered questions here. Uh, okay, yeah, penny stocks. Yeah, so yeah, here's the thing. Bottom line, a lot of the penny stocks right now are de-risked. A lot of the ones we're looking at. AIML, well, now it's up on the screen. I think it's done. I mean, where is this thing going to go? It's like, what do we have? 6 million market cap at this point. It's free basically. So yeah, I think a lot of these things are pretty much done. We are at the bottom. I agree. I agree. It can always get worse, unfortunately. Yeah, anything can happen. But you know what? That's kind of the problem is that, or I should say, the challenge is when you look at kind of Nasdaq, whatever. The Nasdaq has been climbing a wall of worry for the last 12 years, whatever the number is, right? Or even the last year and a half, 2 years. Markets climb a wall of worry. So if things were absolutely perfect, you wouldn't have these stocks trading where they are. They wouldn't be here. They would be trading at 10 times higher. The reason why they are where they are is people are worried. They're nervous. They don't understand it. They don't know it. There's a misperception. Yeah, so let's take a look at paid. This thing could really have a nice run. Anybody who's a degenerate day trader looking at this, this is a good momentum breakout. If you look at this, out of all our stocks, it's one of the few which is really it's above the moving average, pivoting up. This looks very strong, and I showed you the trend line breakouts. Let me clear this. Yeah, Visby. Again, so Visby, I think Visby is going to turn. We're going to see maybe one more little drop. It could hit 75 somewhere here, and that'll be it. A lot of eyes on the stock. They got a lot of catalysts. So there are things in place where this thing can move. CRVC. Let's pull up CRVC. Former client, CRVC. There you go. It's a gold stock. Exploration. I haven't. I don't know anything about it. I haven't kept track. With these guys for months. So I think did they start drilling or whatever. But if they did, if you look at this, it's above the moving average. By the way, the gold stocks are looking really good. The gold stocks. We had on what's his name? The guy. Bruce Campbell, the famous Canadian small cap money manager, he's very bullish on material stocks. I think lithium, metals, gold. We're going to see some interesting opportunities there. Visby trading below ABI deal intrinsic value. Okay, yeah. Yeah, I guess if you do like a net present value analysis of the whole thing, yeah. So there's some tremendous opportunities in the market right now. People are going to be looking back at this. There's going to be people looking back on this market at these opportunities. In May, June, in 4 or 5 months, when a lot of these stocks are 5x higher, they're going to be looking back and they're going to say, wow, why didn't I get in? Why didn't I buy it there? Because the reason why you didn't buy it here was because, there were clouds. It wasn't a perfect sunny day. I mean, that's when you want to be selling these stocks. You want to be selling these stocks when, it's a perfect sunny day. Margin of safety. That is the thing. That is the word I'm looking for. Margin of safety. I like margin of safety. I like the Warren Buffett thinking, margin of safety. So when I look at a chart like this, to me, there's a margin of safety. You got the downside is limited, 3 cents. Where's it going to go? Nowhere. The upside is 10, 20x. Organic garage, same thing. We're already at the bottom. Where is it going to go? 30 cents, and the upside 250. A lot of these stocks have a nice margin of safety. ESE. So, yeah, you got some. Okay. Can OG and fans be a 5-bagger by April, which is 3 months from now? No, I don't think so. I think it's going to take them a little bit longer. I think it's going to take them into the summer. I think at this point, organic garage could start moving. Let's say they have news about new store openings come out, 2 weeks from now. You can have a pop in the stock. It'll double probably in a day, it'll go to maybe 75 cents, $1. It might consolidate in that area, 75 to $1. It's not going to be easy. I don't think it's not going to be easy for these stocks, any of these stocks, to have these fast, straight parabolic moves. It's going to be more of a traditional thing where it kind of goes like this. It's going to be, it's going to be a climb. So yeah, I think the big moves, organic garage is going to take a 5x, $1.50 is going to take minimum May, probably June. Fans Unite, I think the same thing. So, I'm glad you asked this question. Yeah, so Microsoft buying Activision. Esports is heating up. Metaverse is heating up. I got to tell you something. All these things, the stars are aligning for ESC Entertainment. This thing is going to have a lot of tailwinds at its back, pushing this forward in the next couple of months. Esports is going to be one of the dominant themes, next 12 months, 18 months, whatever. Okay. Yeah. What's interesting? I'll tell you something interesting. Originally, I was talking to these guys at the PHRX last November, when it was 2 cents. It was it was two it was 2 or 3 cents. It was right here. It was November of last year. Right after we signed up with Red Light Holland with Trip, and I was like, you know what? And these guys that were doing like psychedelic stuff, whatever. I was like, you know what? Like, I can only handle so many clients at one time. And at that time, we already had stuff that was moving. We had Trip, other things. So I said, like, at the time, the symbol was Buzz, BUZZ. So I liked the chart. I liked certain things, but you know what? My plate was full basically at the time. And sure enough, it popped. It went to 20 cents. I shouldn't have turned it down then. But here we go. Here we are. It's the stars are aligned. And the funny thing is, I think the chart looks better now than it did then. So we could see some, huge moves here. And by the way, what did I say about charts? They can always go back to the old high. Again, I'm not telling you what the number on the screen is right there. I'm not telling you what this, but yeah, I mean, this, if you split whatever, it was a previous business, but these things they do tend to kind of revert or get close. So, can this thing go to 50 cents? Absolutely. It's got actually a pretty good path to go there. Can it go to a buck? I think it can. So I think it could be a winner. I agree completely. I agree completely. Right now, this market, um, you got to be looking at either, um, if you own some of these stocks, you kind of need to be patient. If you're looking to get in, you could be looking to get in right here, and maybe you might want to wait for a breakout. Uh, to be candid, the smart thing to do, again, this goes against, obviously, these are clients. I want everybody to buy these stocks immediately, put all your money into. But the reality is this: the smart thing to do is, if you listen to, let's say, Bruce Campbell, if you kind of read between the lines of what he talks about, he's basically, obviously he looks at the fundamentals, but he's a timing guy. Okay, so he's looking at the moving average. I don't. He didn't say it's, but he's using similar indicators. So he's looking at kind of, he wants to be buying these things when they break out of the moving average or break out into the trend, and he wants to sell them when they break down. So, for some of these stocks, let's say, you'd want to be buying them when they're above the moving average. Now, by the way, Pharma Drug. Oh, this is the 1 week chart, so we're still below the moving average. If you look at the 1 day, we are above. It's a breakout. It's a very, very strong breakout. And you see the same thing here. So I'm not saying Bruce Campbell is buying these, but from a technical standpoint, in other words, you kind of want to be buying them when they're starting to break out to the upside. He would not be buying. I'm not putting words in his mouth. He wouldn't be buying Organic Garage, for example, because he doesn't pick bottoms, right? Smart people don't pick bottoms. Idiots like myself, like to buy at the bottom. It's just a different mentality. The smart thing to do is to buy Organic Garage is once it breaks out above the moving average. Of course, you're going to pay a much higher price. You're going to be buying it 20% higher, 30% higher, whatever it is. But and that's going to be somewhere around 40 cents. So probably the moving average is going to come down, but yeah. Let me catch up to a couple of others. Yeah, so Pharma Drug. Yes, I'm expecting things to double and triple. It is going to take a couple months. It's going to take a couple months to double and triple, and then at that point, so we're talking about by May, okay? And after these things, a lot of these things are going to be doubles and triples by May. And then it's only going to get hotter. I mean, it's going to be a very hot summer, in my opinion. This summer, everybody took off. A lot of people are on vacation. I think this year you're going to see massive moves. Okay, so what's going to make okay? So right now, let's take a look at ESE Entertainment. So the theory, okay, or the thesis, I should say, not theory, but the thesis, or my investment thesis at least, is this. This thing is trading at like a $60 million market cap. They're doing probably close to $50-60 million run rate in revenues. In theory, this thing should be trading at least 5 times revenue, so 300 million. So the stock should be $7. So Kevin is asking, what's going to be the catalyst that's going to get it to reprice? I think the market just needs to, you know what it's going to be? I think once they see the numbers, not the run rate that we're talking about, but they actually see it on the earnings. And that is going to be probably not this quarter, but the next quarter is going to show the earnings with Game Addict. That's the new business that they bought. That's 25 million in revenues, 5 million operating income, I think, plus all the other stuff. So it's going to be a couple of months before we see that. It's going to be probably the second quarter, I believe. So, May sometime. It's going to take a little while. But it could be other things. But to answer your question, that's going to be, I think, the big thing. Yeah, a lot of shares. Yeah, I think, look, the more shares, the better. I'm looking at the market cap. I don't really care about the share count. The market cap is cheap. I don't know. It's like 20 million, whatever it is. It's nothing. Let's say it was 400 million. So that's 25 million valuation. That's nothing for health, biotech drug development deal. It's a lot of blue sky. The more shares, the better, because you got more trading. You got a lot more volume. People like that. Logic. We haven't talked about Logic in a while. Logic is, I think we're building a base here. Look at this. Yeah, it's building a base. Again, below the moving average, but at some point, this thing is going to run. And look at this. Look where it's been again. You're talking about splits, whatever, et cetera, previous. But yeah, I mean, this stock was $14. It ran from 3 to 14 when we introduced it last year, right? 2020. And I'm certain it's going to happen again, just the way it is. DWAC. Let me see. I don't even know anything about this. I barely know anything about it. Yeah, I don't know. Crazy valuation, no? I mean, the idea. Although I'm a fan of Trump, I think the odds of this being successful as a business, minimal. This guy really, outside of real estate, Trump is not really that good like all his other businesses. Like, to build a new social media thing, really steep odds. Really steep odds. The guy should create a REIT. That would be better. I agree. So CEO of the Year, we're going to have to give out the award to Conrad. Because look, we've had so the runner-up. Okay, so I would say there are 3 contenders for the CEO of the Year trophy, but there's 2 things we're looking at. We're looking at stock price performance, which is important, right? Who had the best performance and what has stayed up. Number 2, actual fundamentals of the business. What have they been able to do? Where do they start from? Where do they go, right? So I would say the runners up would be Peak FinTech, because that was a 20 bagger. You had CBDT, that was a 50 bagger. So I would say the silver medal goes to CBDT because that was a 50 bagger. The bronze goes to Johnson from PKK because that was a 20 bagger. Now, why does Conrad get the medal? Because although now ESC was a 17 bagger, 1700%, but ESE actually increased the run rate from a million to 50 million to 50 million. That's much more, much bigger move than the other two guys. And at some point, it's going to catch up to the stock. So we're going to see big numbers on ESE. Yes, we will have the awards ceremony very soon. Maybe next week, Sunday. Oh, they starting to drill. Okay, shit. Finally, they drill. I mean, this is the thing. I think when they signed up with us, that was probably a mistake because they didn't even have drilling going on. They were basically saying, "Hey, we got maps, we got this, that. Keep an eye on the stock, put it away in your drawer, and we're going to start drilling in the September." And it took a little longer. Look, now they're drilling, so hopefully it does well. Yeah. What's interesting, and this is what we talked about with Bruce Campbell on the live stream, is that the bottom is probably going to be the bottom in the market is probably going to be exactly after they announce the first rate hike. So if they announce the big rate hike in March, by then that's already been priced in. I think it's getting priced into everything right now. So by then it'll be old news. It'll be already in the rearview mirror. And I think that's actually going to be the bottom of the market. So March is, I think, going to be the bottom of the market. So, but here's the thing: you want to keep an eye on a lot of these stocks. I think a lot of them could bottom out faster, and you want to be in before they start running. Yeah, I think that makes sense. Okay. Mike, thank you for tuning in. Thank you, everybody, for joining. And hopefully next time I see you, we're going to have much better looking charts. And probably Sunday next week, we'll see. Yeah, the reason kind of why I haven't done the chart chat in a little while is like things didn't really have like a lot of these things were missing a direction, or at least the Nasdaq, we were looking for a direction, and like I kind of want to see a direction. So now we see the Nasdaq is heading lower, but our penny stocks, our next super stocks, are actually kind of either they're at the bottom or they're close. They're closer to the next big run than they are to the top. Whereas some of the Nasdaq stocks, like if you look at Amazon. So Amazon, I mean, this thing looks like it could drop easily to well, you got a little bit of support here in 3,000 range, but then 2,100. So this thing could drop 30%, $1,000. Let's take a look at Apple. Big Nasdaq high flyers. Apple. I mean, this is actually an uptrend, very strong uptrend. But I mean, it's below the moving average. It's hard to say. The Apple is such a strong uptrend that I kind of, I don't see it doing a massive drop. I mean, just such a strong uptrend. Could it go to 137 and 140? Yeah, for sure, easily. Even here, but yeah. But the main, our favorite stocks are looking good. Let me pull up NEO. It's a stock I haven't talked about in a long time. I hate this company, but I gotta tell you, this thing is actually, you know what? This chart is looking kind of, It looks a little bit like ESC, some of our other stocks. This might be a base for Neo here. This might be, it's weird. It doesn't look like it's gonna, like completely waterfall. Let's take a look at PLPR. Somebody was asking Palantir. This Palantir. I mean, look at this very steep downtrend after it broke that moving average. I don't know. This thing could go much lower. It might go to the old lows. It could go to $10, but that's nothing. It's $4, nothing. What else is there? Pop in here. Yeah. So, bottom line is we're very close to the bottom in a lot of the stocks. Now is the time to get positioned. You want to be, again, get ready. Be where the puck is heading. You want to be ready for when the puck comes to you, hit it out, sell off these stocks for 10x plus profits to the FOMO buyers, probably in May, June, July. All right, on that note, thank you everybody for joining. I will see you all on the next live stream.